Plug Power Inc. (PLUG) is currently trading at 2.37 USD, reflecting a decrease of 0.08 USD or 3.27% during this Thursday morning session on January 29, 2026. While a 3% slide might look like typical volatility for a high beta energy name, the reality is that today is the most consequential day in the company's recent history. At exactly 10 a.m. Eastern Time, Plug Power commenced a critical special meeting of stockholders to vote on two massive proposals that will determine whether the company continues as a going concern or faces a structural meltdown. The expectation among retail traders on various investing sites was that the signs milestone, the successful 100-megawatt electrolyzer installation in Portugal, would provide enough momentum to carry the stock through this meeting. The reality is that the market is paralyzed by the prospect of the share count doubling from 1.5 billion to 3 billion shares. If you are tracking the action on your individual brokerage or your favorite Fidelity mobile app, you are seeing a standoff. The general belief is that Plug Power is a green hydrogen leader that just needs more time. The deeper truth is that they are out of time and are currently asking their own supporters for a massive dilutive lifeline. This morning's drop is a direct result of investors weighing the lesser of two evils. If the proposal to double the authorized shares fails, management has explicitly stated they will have to proceed with a reverse stock split to maintain compliance and funding. Neither option is particularly appealing to someone managing a self-investing strategy, but the reality of the balance sheet, which saw a $361 million net loss in the last quarter, makes this dilution an absolute necessity. The movement we see today at 2.37 USD is a fascinating display of technical tension. The stock has spent the last month trying to build a base above the 2.00 USD mark, but every attempt to rally toward the 3.00 USD resistance has been met with a wall of selling. This overhead supply is largely coming from institutional players who are repositioning their risk ahead of the vote results. We've seen significant activity in the options market today, with a high volume of puts being bought as insurance against a no vote. For those using an Interactive Brokers account or a Fidelity trading platform, the implied volatility is through the roof. This isn't just a stock price, it's a live ticker representation of a corporate survival vote. Institutional activity has been surprisingly mixed. While firms like TD Cowen have recently downgraded the stock to a hold rating, citing concerns over the slow adoption of material handling solutions, other firms like H.C. Wainwright have maintained much higher price targets, betting that the $1.7 billion Department of Energy loan will finally close in mid-2026. This creates a massive gap between expectation and reality. The expectation is that government support will save the day. The reality is that the DOE loan has been just around the corner for nearly 2 years, and the company is burning cash at a rate that might outpace the government's bureaucracy. This is why you see such a divide on investing sites. The bulls see a future energy giant, while the bears see a company that has lost 96% of its value over the last 5 years. Let's talk about what Plug actually does, because the technology is the only reason the market hasn't completely walked away. Plug is the primary architect of the end-to-end hydrogen ecosystem. They don't just make fuel cells for forklifts, they build the electrolyzers that create the hydrogen, the liquefiers that store it, and the trucks that move it. Their business model is vertically integrated, which is great for control, but a nightmare for capital expenditure. The installation at Galp's Signs refinery is a major win because they prove they can execute at an industrial scale in Europe, where the regulatory environment is much friendlier to green hydrogen than in the US. However, these massive projects have a long lead time, and Plug has to front the costs. This cash burn is the primary reason the stock is trading at 2.37 USD instead of its previous highs in the 70s. The history here is a story of grand ambition meeting a harsh financial reality. CEO Andy Marsh has been a vocal proponent of the hydrogen economy for a decade, but the company has consistently missed its own profitability targets. In late 2025, they launched Project Quantum Leap, a strategy meant to curtail capital spending and focus on higher-margin service contracts. The expectation was that this would stabilize the stock. The reality is that the cost of maintaining their existing hydrogen network has been higher than anticipated, leading to the current need for a massive equity raise. If you're using a SoFi trading platform or a Robinhood investments account, you've lived through the going concern warnings and the subsequent relief rallies. It's a classic high-stakes cycle. Looking toward the future, the catalysts are binary. If Proposal 2 passes today and the share count is increased, Plug Power will have the operating flexibility to continue building its Georgia and Louisiana plants. This would allow them to stop buying expensive hydrogen on the spot market and start producing it themselves, which is the only way they reach gross margin positivity. If the proposal fails, expect a period of extreme uncertainty and a likely reverse split. The expectation is that the vote will pass because the alternative is so much worse, but the reality of the 3.27% drop suggests that even a yes vote is viewed as a heavy price to pay for survival. Comment below how many shares of Plug you are currently holding, or if you've moved your green energy capital into more stable names like Nvidia stock or a diversified Fidelity ETF. Do you think the $1.7 billion DOE loan is actually coming this year, or is it just a carrot on a stick? I want to hear if anyone in the community still believes in the 2030 vision for a global hydrogen economy, or if you've reached your limit with the dilution. For those of you managing a Fidelity Wealth Management account or using a Schwab Intelligent Portfolios, Plug Power is the ultimate risk-on asset. It represents the potential of a future energy source, but it carries the structural risk of a company that hasn't yet found a way to be profitable. The 2.37 USD price point is a crucial level. If the stock breaks below its recent 52-week low of 0.69 USD, it becomes an existential crisis. But if it can hold this 2.00 USD floor and the stockholders grant the requested flexibility, we could see a slow, grinding recovery as the reality of their industrial projects starts to show up in the revenue column later in 2026. In summary, the 3.27% drop today is the market's nervous reaction to the live special meeting. The central insight is that Plug Power is fundamentally trading its future for current liquidity. The contrast between the expectation of a clean energy transition and the reality of a desperate capital raise is what's keeping the stock in this suppressed range. If you are using a SoFi trading platform or trading on a Robinhood app or managing your own individual brokerage, the next few hours will be more important than the last few years. The vote results will determine if Plug Power remains a player in the 2026 energy market or becomes a cautionary tale of too much too soon. The tension between the company's technological success, like the signs installation, and its financial struggles is the defining characteristic of this stock. As we wait for the official tally from the meeting, remember that the hydrogen industry is a marathon, not a sprint. But to run a marathon, you need to be able to breathe, and for Plug Power, breathing means having the authorized shares to stay afloat. Watch the volume and the post-meeting press releases closely. Would you like me to look into the specific voting percentages required for these proposals to pass or analyze the historical impact of previous share increases on Plug Power's price action? Disclaimer: this content is for informational purposes only. It's not financial advice, so don't make any decisions without doing your own research or consulting a professional. If you found this helpful, don't forget to like, comment, and share. Stay smart with your money.